Hello, mic test, mic test, mic test.
Hello, mic test, mic test, mic test. Hello, mic test, mic test, mic test.
Hello, guys, and welcome to the 174th edition of the Trading Opportunities webinar. And before I start, let me give a very quick introduction so that we can formally move on to the actual webinar content. This is Nirav, admin and owner of the 50is.com website as well as the 50is Market Analysis YouTube channel. And we are conducting today the 174th weekly analysis webinar. What we do is we discuss major global markets every week here. So far in the past 173 of these webinars, we have captured a total of, one second, let me check. Yes, so as I was saying, in the past 173 webinars, we have captured a total of 429 trades. We will check what happened with our last discussion today as we discuss the markets live. Generally, the way we proceed in these webinars is we discuss 1 second, we are having a technical issue. Let me just sort that for a second here. Yes. So the way we discuss is we'll first of all go over the past market data, check what was being discussed about the market, and then check the current market data. That is how we will proceed. And we will also check what amount of analysis has worked out from our 173rd webinar today. And I would like to request those of you who are live to just quickly check and confirm if they can hear the audio clearly before we proceed with the actual content. Well, I'll just check it quickly at my end once again. All right, it's working fine. Thank you for the confirmation there, Joe and Bharti, our regular YouTube viewers, as well as private Slack group members. So, moving forward, apart from the webinar series, you can also go through the Elliott Wave video course, which is for beginner to intermediate traders. And those of you who have gone through it and are in need for more content can go through the book Think with the Markets for intermediate to advanced traders. And of course, we do have a private Slack group where we cover the markets much more frequently, and you can request details for the same over here. 50is.com/contact us. Check the past record for last 6-7 years or so by visiting this page. Anyways, that was it for the introduction. I don't want to take any more of the time, and let's just load up the last webinar before we discuss the live chart here. So here we have the discussion for Euro on screen, and let's just see what was being discussed in the last webinar before we proceed with the current actual market data. So first of all, here we are looking at, let's just move forward and see. We are possibly looking at a zigzag type of correction in the last discussion. Keep in mind the last discussion was conducted on the what do you call 12th of this month, right? And Yes, that is just a zigzag. That's the whole, what do you call, view we were having in the last discussion. We were looking at a zigzag correction, and 1 second. Yeah, as I was saying, we were looking at a zigzag correction, and the B leg is what we were assuming is in play or complete. Both assumptions were considered, and if I just speed it up, you can just check it here. Fortunately, YouTube now allows 4x speed up to. Yes. One view was it was continuing, and the another, possibly not shown here, but is self-implied, is up move. So swing perspective, it was a long. Short-term perspective, it was a possible down move and then up. That was the case in our last discussion. Now heading on to the actual live chart. Just let me know if the audio is clear enough again, because now we have actually started the webinar. Good evening, Raghu, and good morning to you, Luis, our regular viewers. And of course, Raghu is our private Slack group member as well. So yes, as I was saying, the last webinar was on 12th of this month, and 12th is over here. There were two views, as I just said. One view was correction and then up leg, and the second view was implied that the market can just head higher. So in this particular case, this was the count from this point of reference. Yep, B down and C up. Yeah, so in this particular case, the market has done all that. The second setup would have been a breakout long. I probably would have discussed it, and you can just check it in the recording. But anyways, market did go up as expected. And this is a +1 trade. It has hit our upside target, and let's now discuss what this market is really doing at this point in time. So if we assume that this A up, B down, and C up correction is complete to the upside, then we can say that this leg may just be a bigger down move, right? That's the first view. And we can also form further hypothesis, but the main thing remains here that we want to see the market move below this channel or trend line, let's just say. And once we see the move below the trend line, followed by possibly a retest of the trend line, then we can call this a confirmed kind of a trading opportunity. Not a confirmed, I would say a stronger kind of short setup, right? That's the first thing that comes to mind. Secondly, we can also dive into the internal count or internal structure of this leg down, and let's see how much further we have already dealt in the count. So while multiple possibilities exist for this particular instance of reality, for this particular count, we can assume that in case of the bearish structure, we are looking at a possible diagonal in play most likely. And if this really is a diagonal structure, then we can also see a pullback on this counter. So overall, the view becomes something like this, that we can see a corrective pullback to the upside before the market decides to give us some downward movement. That's the case on chart of euro. And how will this come into play? We can just wait and watch and look out for this corrective structure. Secondly, we can also simply just put an alert on this trend line, the red trend line, and once the market gives a move below the trend line, we can then look to consider selling opportunities. Pullback and then fall, or just straight out fall. So let me know, guys, if you guys have any doubts or questions on the current discussion. If not, we can then move ahead with the next chart. I'll just wait a few moments before we proceed with all that. Also, just a minute, let me know by typing clear, understood, or something if you are able to understand all this discussion so far. Let me just go through the comments first, real quick. Thank you, Joe, Bharti, and Luis, Raghu. Good morning, good evening, and thank you for the confirmation there. All right, Raghu and Joe are clear and have no doubt. So, in that case, we can now head over to our next discussion for this webinar, crude oil. Let's see what was being said about this particular chart in our last discussion, and then we will proceed further with today's discussion on crude oil. So here is the recording from our last webinar on CL. We had discussed two possibilities. One was the possibility of a diagonal structure wherein we were looking at possible wave 5 down, and let's just check it here. So short below 62.152 and then upside. And what is the other count? The other count is sideways movement and then down or down. So both were pointing in the downward direction. So let's now check the actual count and see how things have progressed so far. So here's the chart. Let's go to a little bit higher time frame and see things. So this was the first discussion. We were looking at nested impulsive formation, and the consideration was 1, 2, and then 1 and 2 a whole over degree, let's say, dot 1, dot 2. And let me just check if there was something else. Actually, no, that is not the one. I think it was a 4H discussion. Let me just recheck. 1H point of reference is around 78. Yeah, that is the point of reference. Yes, so this was the discussion from last webinar. Now we have it. And this was the first, this was the second, and then this was the first, and this was the second. So this is the nested formation we were looking at. Right, so 12th, 12th, 12th. So as I was mentioning in the webinar, we were this is 12th. So we were here looking for sideways move here. And then down. Or second possibility was straight down. So that was the case with our WTI crude oil discussion. So far, the market has remained sideways. So basically, this is just a play still continuing as we expected. It hasn't really completely played out. So we cannot say that this analysis has completely worked out, but it is in simpler sense moving as expected or moving as per analysis. So this is an interesting market. This will be a wait and watch scenario for us. This week, or sorry, the coming week. Let's now check something of a lower time frame here and see if we have something more clearer. I wouldn't say that's very clear. No, perhaps 1H is enough. So on the lower time frame, we have the assumption that from this point of reference, this is the one, this is possibly the two, or who knows, maybe the two is continuing. As just mentioned earlier in the sideways box range. Right, in either case, we are looking from selling from a swing perspective. That means the market can sustain within the sideways range, or it can go up a little bit, maybe extend the range a little bit and then go down. So that remains the case. So more or less, there is not much to discuss here from a risk to reward based question. Let's just take that because the main discussion is kind of complete here. Let me know, guys, again, if you have any more questions or if clear, just type in understood and clear. Hi, Marco, our private Slack group member as well as regular viewer here. And Joe has a question here. Wave dot two could still be in play as sideways. Dot two, yes, it can be actually Joe. That's what I was saying in the box range. It could just be WXY. We can simply say here that it is complete, but that's the thing. The complex count, the middle part, the wave B part, or the X part can become more complex and it could just look as if it's complete, but it could still be continuing. So yes, in this case, dot 2 can still be sideways and still be continuing, while although it does look like it is most likely possibly complete. So hopefully that answers the question. And yes, that's the point. All right, I don't see any further questions. I'm assuming everyone is clear. So concluding this analysis on crude oil, the idea remains the same. Stop loss will be around the point of reference. Let's just call it around 66.038. If the market goes above this, then you can consider that this analysis is most likely not playing out, and then we will look for something else. Or basically, this is the invalidation level for discount, and the other view is that below this level of 62.152, we look for activating short trades from a swing perspective. Keep in mind, swing perspective is the keyword here, and we look for shorting. opportunities. All right, guys. If you are live, it would be better if you just participate a little bit, like saying things like understood, clear, or something. But oh well, I understand there are no doubts, so there are no comments. That's it, the discussion for crude. Let's conclude and now move on to. All right. Thank you, Joe. Move on to the next chart of gold, which I believe many of you are very keen to hear the discussion on. Thank you, Hardik, for the confirmation. And here is the last discussion for gold. Let's just see what was being said and how things have played out since that discussion. The two views have been discussed here. The first view is that white count is suggesting upward movement, testing the range and then breaking it, correction, and then up. Second view is nothing of that sort and straight leg down. So two views and the upside setup is 3656 plus, so long above 3656. Let's see if the bearish one has any setup mentioned clearly, although it is clear enough that it will be considered below 3630 something. That much is clear from the drawings, I can say. So without putting too much time into all that, let's now just actually head over and see. There was a time frame of 15 minutes. Here is 12th September. So it has followed the H1, although it did give a deceptive leg down, suggesting that maybe the short setup will trigger, but then went up for the upside view. Let's just see if there was some third setup that we had discussed or not really. So, anyways, that was the discussion. And can you explain this actual move, please? Yes, sure, sure, Marco. That is exactly what we are going to do here today. Isn't that what we do with these webinars? All right. So, gold, the long setup has played out. The upside 3656 plus trigger did trigger, and the market did go and actually took the resistance at our expected marked level, as you can already see. Now, let's see what else has happened and discuss all these things from this point of reference. Right. So from this point of reference, we are assuming a flat kind of correction. A flat will generally have three legs down, three legs up, five legs down. This is what we were discussing in the last webinar as well. So this is the three legs down called the A, the structure. Three legs up called as the B. Hello, Muhammad. Daniel Yunus, nice to see you back in these webinars after some time. And this B is assumed to be complete here. this part of this whole expected structure. And I had actually taken short trades on gold, and the view was in the live market something of this sort, that this market is forming a diagonal structure. And I was assuming this was the 1, 2, 3, 4, and it will go down. Although, of course, as we can see, it did not play out, and this market is doing something other than what was expected at first. So now, if it really is forming a diagonal still, then it could be. We are basically, just to reiterate, we are discussing the wave C structure down, this leg down, and C leg could be simple impulse or it could be diagonal. In this particular case, we are assuming it's a possible diagonal. Hence, we are assuming that this market could be forming something of this sort, a diagonal in play. Again, that looks less plausible because this is not looking like a diagonal anymore, and this also suggests that more downside is going to be seen, which generally is likely but not the expected scenario for this bullish market of gold. So the second idea that I can think of is that this market is possibly continuing as some sort of complex structure in which wave B is possibly not complete and it's still continuing sideways. That would mean this B can propagate within this box range. It could go up, it could go down, go up and down, and then eventually it will go give this C leg as the final wave and then progress upwards. That's just one way of looking at it. Another view would be that this whole structure from this point of reference is a wave 4, and wave 4 can also propagate as a complex or perhaps even a triangle, which may very well be the case. So if that's the scenario, then this could just be A down, B up, C down, D up, and then there will be an E down. So that would be the scene or the case for the structure. So eventually what we can say is that this market is a long contender from a swing perspective, and technically we can place the stop loss at 3629.5. The reason being that the overall count remains bullish. The higher time frame count, which we would have discussed in the last or last to last webinar, remains bullish. So after the circle 3, we are looking for circle 4, which will then lead to circle 5. So in short, we are looking for bullish movement on this counter. And if that is the case, then we are assuming that from this point of reference, we are either seeing some sort of complex structure, some sort of triangle, and in both cases, this box range should be broken to the upside. So technically, you can place a stop loss 3629 or even at 3613. Actually, it should be 3613, but yes, given the case that there is the possibility of a strong upward trend on the high time frame chart, we can just go with 3629. That's the case. So from swing perspective, we can look for long trades here, and those will be the stop loss levels. For conservative view or conservative trading style, we can just look for trades above 3695. Breakout longs, basically, nothing very fancy. So that will be the case for the analysis of gold. Let me know, guys, if you have any doubts or questions. And if not, just type in understood or clear and we'll move along with the next chart. There's a comment from Joe. So much possibilities. I was even seeing a small expanding triangle forming at the end. Ain't that nice? Looking at different possibilities, and that's the way to do analysis. So Joe is on the right path. Thank you for the confirmation, Muhammad, Raghu, Joe, and Bharti. So Raghu has asked on higher time frame, can gold hit 4,000? Let's just check that very quickly. One second here. Yes, the incoming target of the upper channel is coming at 4052. So yes, 4,000 plus is likely in case of a super strong bull move. But do note this is the daily time frame. So, but then again, that was the question on the higher time frame. 4,000 plus levels can be seen. So that answers your question, Raghu. With that, I believe everything has been answered and everyone is clear on the analysis of gold. And before we move further with the charts of S&P, BTC, and NVIDIA, here's a quick request, guys. When will you start seriously sharing the content? This is 174th edition, and still our views are not hitting 1000 plus when gold is hitting 3000 plus. Unrelated things. But, anyways, kindly do a little bit of sharing at your part, sharing in private groups which you have of traders, or just send it via social media or your WhatsApp, Telegram, or whatever you use to your friends or colleagues who are into trading. But kindly do share it. The last webinar didn't even cross 300 views, I think. So, what is the world coming to? Anyways, that's the case for gold. And let's now head over to the next chart of, you're welcome, Raghu, of S&P's 500. Which one is the case? This chart or this chart? One second, let me just check at once. So let's just check what was being said on the chart of S&P's 500 in the last webinar, and then we'll proceed with the current discussion. Basically, we are just looking at bullish movement, bullish movement. Yes, just bullish movement. Let's just see if something else was there. So there is a possibility for a diagonal discuss, which suggests short-term correction possible and then bullish movement. So swing longs and short-term buys, yes, correction is possible, but swing perspective, this market is long. I don't know if one of these counts was biased. I think bullish count is biased, as I can see in the diagonal count also. I'm pointing in the other direction. So anyways, that was the case. We are looking for more of a bullish movement from a swing perspective. In our last discussion, let's just check the date. Here it is, 12th September. So somewhere the market was trading and the market has gone up. How much since our last discussion? Let's just 65.95 something. We were discussing the market has gone to 66.34. I wouldn't say the whole analysis has played out precisely, but yes, the direction and the bias of swing perspective long has played out precisely. And if things were managed properly, this would have been good trade. So yes, this is a plus one again from S&P's 500. And now let's just check the current interpretation for this counter. So right now I'm assuming that this count is possibly heading inside a sideways corrective range. Maybe this is the A leg down. Maybe this is the B complete perhaps here. Or maybe it's a complex structure, in which case it could just be propagating sideways, perhaps even extending the range a little bit. Right. So considering both possibilities, we can say that S&P is actually this is the first possibility here. We are assuming that this is heading for a B, and I personally think this B is possibly just having some more upside remaining. So this is the rough outlook we are assuming for this S&P's chart, that the B is still in play. Perhaps a correction after that, and then upward movement can resume. Secondly, this was a wave 3 of a lower degree. This was considered as a 4, and this can be considered as a impulse in the upward direction. So that could be the whole play. Again, it comes down to it. We are looking at bullish play only. And swing perspective, the buy still remains bullish. Of course, we have alerts at 6616, which is basically the level we do not want to see the market sustain below. And if the market goes below that, we will then be considering bearish possibilities as well. But overall, one is an assumption. Let's just call it dot one here, dot two here, dot three, dot four, and dot five. So one assumption is H1 suggesting impulse. Let's just call it H2 suggesting impulsive upward movement. And here is the H1 suggesting sideways movement for continuation, sideways to up, correction, and then up. So H1 is suggesting also upward movement, minor up, not strong up from here. Both perspectives we are looking for long, and the invalidation is a 6617. Setup in this case will be very simple. Setup in this case would be to look for breakout longs, nothing very fancy. So that will be the simple setup on S&P, and I don't think there is much of a thing to say here. Above 6666 soon. Yes, Raghu, it is a possibility as we just discussed, but I wouldn't say it's the whole position kind of possibility. Like I think this may require some position sizing. For instance, we can enter, or I'll personally look to enter partial here maybe, and then add more if it gives a pullback, as this market may not go up in a very straightforward manner. All right. With that being said, we are now done with this discussion. Let me know if you guys have any questions or doubts on this discussion so far. If not, just have it understood or clear, and then we'll move over to the chart of BTC, which will then be followed by the last chart of NVIDIA. Thank you for the confirmation there, Joe and Raghu. All right, let's now head over to next chart. So here is the discussion from our last webinar on BTC. What are we assuming? We are assuming that this market is heading. One second. There it is. This is Bitcoin. Yes, we are assuming upside movement on this counter of BTC, and that's pretty much it. More upside is what we were expecting on BTC. Let's now check the actual chart. Thank you, Mohammed and Marco, for the confirmation there. So on the actual chart, we are looking at 12th. So 12th is somewhere here. Somewhere here we were analyzing this market, and the idea was we were assuming that this will just go up. So yes, technically it has gone sideways and then up. And as such, I did take some minor long trades on this counter, and they were successful as well, but nothing major. The movement was small and constricted. Technically, it has worked out and not worked out at the same time, because the plays were not very big and the movement has not been as big as we were assuming it to be or expecting it to be. So let's leave the last discussion and see how we are assuming things to play further from this point in time. So that is the expected view here. Possible correction back into the congestion zone or the support level. This support level basically. So we'll just wait and watch and see how the market behaves around this range of 113370 and 109761. It's an wait and watch market, and of course, breakout longs are possible above 117488. Although I personally am not very keen on it because at first we are going to see some pullback. That's the expectation at least. And this, as such, is kind of moving quite clearly. So this is going to be a market, an interesting market, and we would want to observe it during the coming session. So keep it in the top part of your watch list or track list. As such, we can also be a little bit more precise as for the correction levels. So anyways, concluding, this is what we are seeing on this chart. This is the analysis. Let me know if you guys have any further questions on this counter of BTC. Else we will move over to the last chart for this discussion of NVIDIA. So this is the range we are looking for, and let's count. You can also place an alert somewhere here, so in case the correction is complete, we can then plan for bullish trades, possible bullish trade setups. It looks like everyone is clear here, so let's just now head over to the next chart. Let's just first check what was being said on the chart of NVIDIA in our last public webinar. Uh, 183.62 plus. So the basic analysis was that this was in a wave 4 circle degree as is visible with the counts from the last webinar, and we were expecting this counter to head higher. And we have even mentioned the breakout long level. So again, nothing very fancy. It's a simple discussion here. So now let's head over and check. Nothing has really happened. It hasn't broken the upside 183.60 level. Neither has it invalidated the whole count and broken the bottom part here. So more or less this market is still a wait and watch. The setup still remains the same. We wait for breakout to the upside. And as long as that hasn't happened, this market can just propagate sideways within the range. That's generally what wave force do. And here's the comment from Raghu. He's saying NVIDIA is not moving proportionately to S&P Nasdaq resistance at 178. So short-term resistance is what Raghu is asking. So this is the range for resistance within this range. Lower bound is at 176.18 and upper bound is at 179.80, or let's just call it roughly 180. So between 180 to 176. is a resistance zone, and yes, as such, the market is actually stuck there as of now. So we need to see clearance of this level or above this level. Let's just say, roughly speaking, if the market sustains above this, then we can look for long opportunities on this counter of NVIDIA. So that would be all for the discussion of NVIDIA. It's not the most interesting market right now, although the setup will be clear once it becomes available to us, and we should place an extra alert here as well. So wait and watch on NVIDIA. We are looking for long consideration above 180 plus, and breakout long, actual long will be the last near last high. Let's call it 184 plus. But anyways, practically speaking, that will be the case or thing we'll look out for in NVIDIA. Let me know, guys, if you hand out some questions on this chart. If not, just type in understood or clear. And with this, we would have concluded the whole webinar or the whole 174th webinar of the Trading Opportunities webinar series. And of course, do not forget to hit the like and much more importantly, share this content with your friends and colleagues so that we can get more quality views. And of course, if you're enjoying the content and would like to see more of it, you can just enroll in the Slack private group. Details will be available in the description of this video on LinkedIn and YouTube. Thank you guys for those who stayed till the end, and it was nice to see you here. Raghu, thank you for the confirmation. Thank you for the confirmation there, Bharti, and you're very welcome, Louis. Of course, consider sharing the content. I would very much appreciate some confirmations here that they will share the content. Joe, thank you very much for the live. Nirav, you are very welcome, Joe. Thank you, Raghu, for the nice words, and Muhammad for the confirmation. Well, Joe, I don't drink at all. Anyways, that's it for this webinar. Thank you guys for those who stayed till the end. And yes, much more thanks to the guys who continue sharing the content and support us that way. With that being said, enjoy the weekend, guys, and take care. And I'll see you guys in the next one. All right. Bye, Joe. And bye, everyone. See you guys in the next one. Take care. Bye.